Hi everyone, it's Daniel Chin, the founder of Chin Properties. Now today I would like to really expand on some of the things that I've spoke about recently with regards to real estate and what is really going on. So last year I've mostly said that it was very unprecedented, which it is with the whole COVID-19 global pandemic, and there was lots of uncertainty in last year and lots of disruptions with the businesses in different sectors and in different industries. And real estate, not much really happened during the lockdown period, the first lockdown period of last year. And now, as I'm recording this video, we're in a second lockdown in Ontario in the beginning of 2021 for January, for a 28-day lockdown period. Who knows, it may be extended, and it certainly will continue to disrupt a lot of the small businesses, right? The brick and mortar stores, the bars, the restaurants, and certainly with in the travel industry, right? You have some of the airline industries, they are not closing, they're not closing some of the operational routes, like flights going out of Toronto, out of Montreal, and some airlines like Southwest Airline in America, they're burning about 12 million cash a day. So it's pretty bad. So in the real estate industry and with everything that is happening, there is like the Darwinian theory, like they say, adversity creates opportunity for those who are best able to adapt. So for all of the business owners, the entrepreneurs, especially in the industries or the sectors that are being very decimated, certainly adaptation and flexibility and really being able to pivot in these very challenging times, that creates opportunity. And as an opportunistic investor in real estate, there are a lot of things to look forward in the next coming years to 2023, as interest rates will remain very low, probably near zero. Currently the overnight lending rate of Bank of Canada is 0.25, and the Bank of Canada projects a strong rebound of the economy, and they will continue to print the money. They will do whatever it takes to have a very stable and strong economy, because with looking at how the jobs are, as we're in a lockdown, more people would lose jobs. They would, have to be on unemployment, which is EI, and it certainly wouldn't be a great time for a lot of people. So in real estate, what you're seeing is, well, in office, what I think in the next few years from what I've read, will be more of the traditional office spaces will be in a decline, and you would have at least 30% of people would continue to be working from home, permitted that the industry or the type of industry that they're in. For example, if they're tech companies, then working from home can save a lot of costs. And certainly in the banking sector, they are allowing people to continue to work at home, and the banking sector is certainly cutting down on their costs, as well as they're adapting to remain competitive in the banking sector. Now when it comes to the retail, the brick and mortar stores, there are 181,000 small business owners. They're seriously thinking about really closing down their operations because they can't see themselves surviving any longer, as we're in this second lockdown, where we have the stay-at-home order, we have mask, people are not going out, no one's spending. It's really bad, and you might see more stores closing down. Now with industrial, there is actually an increase in industrial demand for industrial buildings, because the e-commerce certainly has been very positive in 2020, and it continues to be positive. So you have large food companies And real estate companies and investors, they are buying these industrial buildings because there is growing demand. And certainly, you would have more of these industrial spaces, and you would see even some of the anchor tenants in malls, like these retail department stores. It will be transformed into fulfillment centers, and certainly that's where the future is heading, where you would have these fulfillment centers in the urban cities or the major cities, and you would have these drones, delivering packages, and that technology is really being developed right now. So in the future, I can really see more in the next 5 years, which is realistically, you would see self-driving cars, you would see drones, and certainly the world would be more digitized. It would be a more digital world. And like I've said, since beginning of 2021, it's a new world, right? We have really transitioned into the new world, and more things would be digitized, the way how we do things. And you're certainly seeing it in real estate. In the process of closing some transactions, you're signing remotely, and some of these, the whole process is being more digitized. So the hotel industry, certainly they've been very decimated in real estate, and some of the hotels are being used as quarantine centers, and because the revenues, they ain't going to come back very soon as we think. It will continue to have very high vacancy rates, but certainly the big brands will prevail, like Marriott, Hyatt, and all of these big brands, Hilton hotels, they would prevail and continue to still be in business. With residential, there seems to be also growing demand with single family rentals. So home builders are really seeing that, where people that purchase their single family homes or townhomes, and they're renting it out, and there seems to be a growing demand with single family rentals. There will continue to be that strong rental demand with multifamily, which was the least impacted throughout the COVID-19 times, and the rental demand remained very strong. And given it's in selectively good locations, there's always very strong demand or high rental demand for people renting. And I've said before, over the next 10 years, there'll be more people renting as things are becoming more unaffordable, as prices are rising and people's incomes are not rising, and there would be less home ownership. But there will still be a certain amount of homeowners, or those first-time home buyers, that can be able to purchase. And the travel industry, as I've said, the travel industry has been brutally decimated. Even the cruise lines have halted all of their cruise operations till about October, November this year of 2021, and it's millions and billions of dollars of revenues that's lost. So, but of course, these large companies have foresee how the pandemic or the virus, the mutated virus, has evolved, and and have planned to line up liquidity to ensure that they can ride this through for another 3 to 5 years, so they can still remain in business. So with the overall of everything that I've said, deals are still happening in real estate, right? And certainly be very savvy and do your due diligence. And there are still opportunities out there in real estate, and still have patience, right? Still have patience, and you may find the deals where some commercial or residential landlords or owners decide to sell, if not restructure their debts. But if they decide to sell, that can be opportunities, for the opportunistic investor. So hopefully, all of this information with regards to real estate in the different sectors of office, retail, industrial, and residential, right, is insightful for you. And if you like this video, click like or subscribe, and I'll surely make more videos about real estate for the real estate investors and everyone, all of the real estate professionals, right, in real estate as well, and also the buyers and sellers. So thank you very much for listening, and it was a pleasure making this video. See you in the next video. Thank you very much.